Hello everyone, welcome to our channel Sheerexperience. In our last videos, we learned how to prepare machinery account and provision for depreciation account using straight line method and diminishing balance method and solved few problems. In today's video, we will see how to prepare asset disposal account along with machinery and provision for depreciation accounts. Let's solve a problem now. Following balances appear in the books of Miss Amrit on 1st April 2018. 1st April 2018 machinery account 60,000, provision for depreciation account 36,000. On 1st April 2018 they have decided to dispose of a machine for 8,400 which was purchased on 1st April 2014 for 16,000. You are required to prepare the machinery account, provision for depreciation account and machinery disposal account for the year ended 31st March 2019. Depreciation was charged at 10% per annum on cost following the straight line method. Understand the problem here. As per the problem, we need to prepare three accounts: machinery account, provision for depreciation account and machinery disposal account. Machinery account balance and provision for depreciation account balances are already given in the problem. Machinery account balance is 60,000 and provision for depreciation account balance is 36,000. We will write these two balances in their respective accounts. On the debit side of the machinery account, the date is 1st April 2018. In particulars column, we write to balance brought down and the amount is 60,000. On the credit side of the provision for depreciation account, date is 1st April 2018. In particulars column, we write by balance brought down and the amount is 36,000. In the question, we are asked to prepare the machinery disposal account too. We have an extra journal in this case, that is machinery disposal account debtor to machinery account. We are transferring the cost of the asset from machinery account to machinery disposal account. That's it. Cost of the asset is nothing but the purchase value of the asset. We will record this entry in machinery account and machinery disposal account. So on the credit side of the machinery account, in the date column, we write disposal date, that is 1st April 2018, and in the particulars column we write by machinery disposal account and the purchase amount is 16,000. On the debit side of the machinery disposal account, we write the same date, that is 1st April 2018, to machinery account in the particulars column and the amount is 16,000. Since we have disposed the machine, we need to calculate the accumulated depreciation amount for this machine. Purchase date of the machine is 1st April 2014 and we have disposed the machine on 1st April 2018. So we need to calculate the depreciation for 4 years starting from 1st April 2014 to 1st April 2018. So 10% depreciation on 16,000 is 1,600 per year. For 4 years, it is 1600 into 4, which comes to 6,400. This is the accumulated depreciation amount for the disposed machine. Now we will update this accumulated depreciation amount in provision for depreciation account and machinery disposal account. Why we need to update in the machinery disposal account? Because the journal entry here is provision for depreciation account debtor to asset disposal account. Here also we are transferring the accumulated depreciation from provision for depreciation account to machinery disposal account. If the machinery disposal account is not asked in the problem, then we would have transferred this accumulated depreciation amount to machinery account. Since we are maintaining machinery disposal account here, we are transferring the accumulated depreciation amount to machinery disposal account. So on the debit side of the provision for depreciation account, we write the disposed date, that is 1st April 2018, to machinery disposal account in the particulars column and the accumulated depreciation amount, that is 6,400. In the machinery disposal account, we need to show the disposed value of the machine, that is 8,400. Journal entry here is bank account debtor to asset disposal account. Usually we credit to machinery account, but here since we are maintaining machinery disposal account, we are crediting to machinery disposal account. So in the date column on the credit side, we write 1st April 2018 and by bank account in the particulars column and the disposed amount is 8,400. Now we have to record the loss or gain on this disposed machine. Loss or gain is usually recorded in machinery account, but here we are preparing machinery disposal account, so we are showing it in machinery disposal account, not in the machinery account. To know whether we have earned a profit or incurred loss, we need to deduct the book value from the sale proceeds. Here the book value is 16,000 and the sale proceeds or the disposed value is 6,400. Here the book value is 16,000 minus 6,400. 16,000 is the purchase value and 6,400 is the accumulated depreciation. So we get 9,600 as the book value. And the disposed value or the sale proceeds amount is 8,400. So 8,400 minus 9,600 comes to 1,200. This is a negative balance, which means we have incurred loss. If the value is positive, then it is a gain. So on the credit side of the machinery disposal account, the date is 1st April 2018 and buy loss account in the particulars column and the loss amount is 1,200. If we get profit, we will record it in the debit side. Now we have to calculate the depreciation for the leftover asset balance. Machinery account balance is given in the problem as of 1st April 2018, that is 60,000. In that balance, one machine is sold. Purchase value of the sold machine is 16,000. Now we need to deduct this purchase value of the sold machine from the machinery account balance. That is 60,000 minus 16,000 comes to 44,000. 10% depreciation on this 44,000 is 4,400. Why are we calculating depreciation on the leftover balance of 44,000? Because we are asked to prepare the accounts till 31st March 2019. Please pay attention to the problem. Journal entry for this is depreciation account debtor to provision for depreciation account. So on the credit side of the provision for depreciation account, we write the date as 31st March 2019. That's the financial year end date for 2019. And mention buy depreciation account in the particulars column and the depreciation amount is 4,400. We have recorded all the transactions in these three accounts. Let's balance all the three accounts now. For the machinery account, the higher balance is on the debit side, that is 60,000. We write this on both the sides. Now we will deduct the lesser amount from higher amount, that is 60,000 minus 16,000. That comes to 44,000. This is the balance as on 31st March 2019. This is the balance carried down amount and the same amount is brought down to the next year beginning, that is 1st April 2019. For provision for depreciation account, the higher balance is on credit side, that is 40,400. If we deduct the lesser amount, that is 40,400 minus 6,400, we get 34,000. This is the balance carried down amount as on 31st March 2019. This is mentioned on the debit side and the same balance is brought down to next year beginning, that is 1st April 2019. For machinery disposal account, the balances on both the sides should match with each other. So on adding up, we get 16,000 on both the sides as balance. This balance is matching. This is how we solve a problem when machinery disposal account is asked in the question. Hope the explanation was clear and I have written down all the journal entries for your reference. If you're not sure about any of the journal entries, you can pause the video here and have a look at it. Please let me know if you have any questions in the comment section and subscribe to our channel for many more videos like this. Thanks for watching this video and enjoy learning.